Good morning, everyone. This is Joe from New York Trading Room. I took gold long.
We are in the midst of a holiday shortened week. We're already seeing liquidity things. So to make any big decision right now or take away any message from the market is pretty harrowing, probably not the best decision. And the reality is, yes, you're asking about the short term, but if you are not a trader, if you're an asset allocator, if you are an investor, the bigger risk between the two, if you're a question of the day, I'd say it is COVID. We see that in the way that the market is trading today. If you do want to look at the short term technicals and the underpinnings of the market right now, but long term, we still believe that the outlook is pretty constructive. After all, if you do look at the way that the market has been trading wave after wave after wave of COVID-19, we have seen diminishing effects. And right now, yes, data is very limited. It's very early days, but the understanding is that as of right now, the Omicron wave will likely bleed into that of the Delta wave.
Sarah, this time's different though, isn't it? Because previously we've had huge amounts of monetary support, we've had huge amounts of fiscal support. We're not going to get either this time round.
You're right. This time is different because last week the market's already contending with the effects of a hawkish pivot from the Federal Reserve, and then you throw in the headlines this weekend, more on Omicron, and then more as well on the Biden economic agenda. We see roadblocks there. So yes, you're right. This time is different. But what is not different is the fact that the Federal Reserve, while yes, they have made a hawkish pivot, they've said over and over and over again that they will remain nimble, they will remain flexible. Just look at the change that we saw from Powell and Co. between September and last week. I mean, it was a world of a difference. All of a sudden, the dot plot shows 3 hikes expected for next year, but we all know the dot plot can change.
Okay, we closed the first trade with profit, and let's take another one. Okay, I went short gold now.
That COVID and Omicron is really such a concern is that when you think about 3 of the main risks right now, Omicron and COVID, a policy error from the Federal Reserve, and inflation, the 3 are all very much intertwined because of how Omicron can potentially affect global growth and how it can also affect supply chains.
Right, so let's dig into that, Anne-Marie, because we're talking about the removal of Fed support, we're talking about the removal of government support in essence. Does that conversation need to be rethought in D.C.? I mean, the child tax credit is expiring at the end of December. Do you think we're going to get some kind of action from the White House in support if Omicron just continues to pummel the U.S.?
Well, right now what we do know is that when it comes to the economic agenda, that Senator Schumer says that he's going to bring that vote to the floor in January 2022, and that any senator can make their position clear to the world on the floor of the chamber instead of in front of the television cameras. Clearly a dig at Senator Manchin. And what they're going to be doing tomorrow on Tuesday is discussing this Democratic caucus a path forward. Potential we could see is some policy points, like you mentioned, the child tax credits. Potentially some of these could get passed, and there is a version of Build Back Better that is only a few policy points, but supported for a longer period of time. And that's kind of what Joe Manchin was getting at this weekend with his interview. But this is going to be incredibly difficult because the president's credibility is on the line with the progressives who voted yes for the hard infrastructure with the promise that he was going to deliver on the massive social spending and tax plan. And right now, it does not look like that path is possible.
Anne-Marie, did the arithmetic in the Senate change this weekend? We've been assuming that Joe Manchin is a Democrat. Should we now be thinking of him as an independent? And what are the implications of that?
Well, it's not just this bill that they desperately need Senator Manchin for, right? If the Democrats want to do anything alone, they need every single senator that caucuses with the Democratic Party. And right now that's 50, and of course the tie-breaking vote from the vice president. But Senator Manchin has been saying this for weeks. He's been struggling with issues happening right now in the world, and he talked about this subsequently in his press release following that interview. Inflation, the COVID pandemic, the uncertainty of where that goes, and geopolitical concerns, and making sure they have firepower to address these concerns and not spending on other issues. And that's really the crux of what he was getting to. He's still going to caucus with the Democrats, but he's clearly on the right side of that party.
Right, but he loses all power if he goes out of the Democratic Party. Right now, everything hangs with him. I was having that exact conversation over the weekend. Hey, Sarah, last question for you, just sort of the market moves right now. I'm so interested in the stocks that are actually in positive territory right now. Carnival, American Airlines, Royal Caribbean. At the same time, you have AT&T and Clorox. Am I learning anything about a reopening, non-reopening, COVID, non-COVID trade right now?
Not necessarily. Typically, whenever we get strong headlines about COVID-19, as we have really over the past 2 years or so, we see this classic trade in which reopening stocks move to the downside and your stay-at-home stocks outperform. But as you just mentioned, that's not necessarily what we're seeing. We're not seeing the playbook play out per se right now. But again, very thin holiday trading right now. You can't take away too many messages. And when we think about where we want to be heading into the next year, if you're going to take a little bit of a tactical shift, yes, some of the areas that you just explained are very beaten down, even though indexes, the S&P still isn't even 5% from a record, but we still favor the cyclical value trade.
Biggest friend to biggest enemy. Is the Powell put dead?
I don't know if it's necessarily that black and white. Is the Fed going to be the market's absolute best friend forever anymore? Maybe not. As Bob Dole did say, they're going to be taking away the punch bowl. But are they going to become the market's worst enemy? I'm not so sure. After all, when we think about what the Fed messaged last week, yes, right now we're expecting 3 hikes next year, then potentially 3 hikes the following year. But when you consider right now, Fed funds rate is as low as it can possibly go. Well, that is, unless you were to go negative, but a Fed's fund rate near or close to zero, even if you get 3 hikes next year. And what we assume is that we won't see a hike of more than 25 basis points a quarter, so at a slower pace, then monetary policy at the end of that is still relatively accommodative. So even in a world where interest rates are rising and the Federal Reserve is not your best friend anymore per se, it's still a world where it's almost as if there still is no alternative, because yields will still likely remain relatively low compared to history.
Sarah, when you think about inflation, you think about the narrative we're going to be working with throughout next year, where do I want to sort of take advantage of that story that isn't already priced right now? We've started to see people, you're moving out of big tech. There's certainly some evidence of that. I hear a lot of conversations about kind of, you want to buy infrastructure, you want to buy those kinds of places, real assets. Is there any area that isn't tapped yet in terms of providing protection on the inflation front? Where's the cheap inflation protection still?
It's a good question, because if you do look at least at different sectors of the equity market that would be levered or tied to the inflation story and the reopening.
Alright guys, we took a couple trade, we did almost 800 something. So you can see we did 11,000 so far this month. Our target 15,000, and we still have like 10 days. I hope we can make another 3-4,000 next few days. And that's it for today. Have a great day everyone. Take care.